Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Tuesday, June the 28th, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures and the head moderator. Each morning we get together in these live go-to sessions to take a look at the market macro to micro, look at the structure of the market, drill down, look at our targets and our trade levels and our hypotheses for the day. Then we do live trading and analysis during the course of the day. This is a subscription room, so if you're interested in checking it out, email me at quantumleapfutures@gmail.com. There's no website, there's no blog, this is not a commercial venture. We're going to get going in just 1 second, but please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, with that being said, let's just take a quick look at the news. We had final GDP quarter over quarter, expected at 1.0, came out at 1.1, better than expected. Final GDP pricing index expected at 0.6, came out at 0.4. In about 13 minutes, we've got the S&P CS Composite 20-year HPI year over year, expected at 5.5. Then 10 o'clock will be the next big news at CB Consumer Confidence, expected at 93.2, and Richmond Manufacturing expected at 2. Then we've got Powell speaking later in the day, later in the evening. But the other one, the big one, is going to be that this is the start of the two-day meeting of the Euro group, and to talk about the Brexit and how it affects moving forward with the euro. So there will be some headline risk on the table again today, still dealing with Brexit as they move to exit the euro. All right, so each morning I like to start my day with a basic chart and taking a look at the macro to micro, just see where we are within the trend. You can see that we've got a challenge to the trend again. We're below the 9 and the 20. Very key to look at where these two levels are right now. They're basically in the 2023, 2024 level, which is going to be a key level for us because that puts us up inside of the value that we fell out of. But right now, currently, the trend is being challenged on the monthly, and we're below the 9 and the 20. I use a 9 EMA and a 20 SMA. On the weekly, we had this trend going, and then the last couple of weeks, they violated the trend, and we are now below the 9 and the 20 and coming up into a possible moving average cross here. But right now we've got a possibility of a start of a downtrend on the weekly, but it's still very early. On the daily, you can see that we had the big fallout day on the Brexit, and we're below the 9 and the 20. We're getting slope and separation to the downside. We do have a technical gap right here. Is this a little Mr. Sneaky so far? Low is 81.50. Low is 82 and a quarter. So right now we 82 and a quarter, is that right? I'll have to check that out on the Globex chart. Yeah, because this won't include the ETH, which I do in my Globex. Right now we have a very weak low. We put in two bottoms. We had a double bottom in the RTH session, and then we put another double bottom in during the extended trading hours. But then Globex has held that weak low. So just keep in mind that we do have a weak low down here at 81.50. And if we see some more weakness coming in, I'd be looking for them to go down and break this weak low. But that's going to be a little bit away because we're trading at 2011 right now. But the trend itself is a start, but we do have a technical gap, and a tech gap will bring us back up into the 2040 area and up towards that microcomposite VPOC of the balance we just fell out of. Going to the intraday, you can see that we've had this strong downward trend We created a technical gap here, closed that technical gap, failed to get above the 9, fell off again, created another technical gap, basically closed it out, somewhere right around here, and then we fell off again, creating another technical gap. And you can see that double bottom down here I was talking about. We've closed the technical gap, and now we have a close above the 9, so we are starting to challenge this downward trend. It does not get violated until we get up above the 2030s, or the 2030 level, I should say. So trend is being challenged to the downside on the 4-hour. On the 1-hour, you can see that we've started an upward trend. We do have a naked cross down here at 1996. I would write that down in your journal, because if we get below the 2000, actually 1997, 50 is what I'm looking at. If we get below there, then I would expecting to target this naked cross right here on the 1-hour time frame. But we do have a start of a possible trend up. We got some separation, some slope. It's not great yet, but it's looking promising for a upward trend. On the 30-minute, you can see that we have had this strong upward trend. They tried to challenge it and held the 20. Now they've bounced above the 9, and we're getting continuation to the upside. And on the 15-minute, we're seeing, again, start of a trend. Bit of a technical gap going on right now. Gap close is going to bring us back into the 207. There is a naked cross as well right here. I don't put a lot of stock on these smaller naked crosses because we basically just dip below and then cross back over again. It's not as significant as something like this, where we went way below and came back up, or one of a major one like this one right here, where we crossed over. And have we come up to that one yet? So we have a naked cross still above us right here at 2014.75 on the 15-minute. And then just going to the 5-minute. Come on. You can see that we do have a upward trend going on the 5-minute, but we do have a technical gap. Remember, technical gaps can be closed by time, by moving sideways and chopping, or by price, by coming back towards it, or a combination of both. Usually it's a combination of both. So I'd be looking for this gap close to close somewhere in around the 09 level. But if we close it through price and time, if we close it through through time, then you're probably going to close it in around the 20.10 level. Anyway, going to the structure, you can see that this black outline right here, this is the longer term microcomposite that I've been watching, that goes from the March 17th to the breakout above, and then we were watching this one right here on the smaller time frame. We fell out of both of them and came down and hit that key target at 1983 we were talking about. That was the naked cross on the weekly, and one of our major targets that we were targeting yesterday. One of the key levels that we just got above is something from prior, which is the microcomposite LVN of the upper distribution that created all this balance in 2016. This is the last quarter of 2015, and I still have a key microcomposite LVN here at 07, and we just got above it again. There's another one that is a key one, the one in black right here, this one right here. This is the smaller time frame microcomposite, and that's the smaller microcomposite VPOC, and then the value area is 2023.50. So 2023.50 is going to be major resistance above. It's going to be our key line in the sand above, because if we get back up inside of that, then I'm expecting a rotation up into the 2042 area and back into this blunt area that surrounds the composite depot that goes all the way back to the beginning of 2013, and put us back into balance. Right now we are out of balance, and we're coming up and coming up close to testing. We just put a high in I think 1175, testing into this gap zone. You can see that we've got a CLVN here at 12. We got right to it and we rejected it so far, but we have this gap. The range gap goes from the high of yesterday at 1075 to the low of Friday at 2016.50, and that these are RTH sessions. So that's this gap that we've got going. And then the naked close is up here at 2021.75, which is also going to be a key target for us today. If we hold below the 07, we get back below the 07, I'm looking for a move down towards that 96 and 94 level for buyers to step in somewhere between the 98 and the 94. If they can't hold that level, then I'm expecting them to take out that weak low down at the 81.50. But right now we had a B-shaped profile yesterday. If you take a look at yesterday's profile, we had a B-shaped profile. In fact, it's better if I show you on the market profile. Let me just get rid of the split letters here. This is a classic B-shaped profile where we're getting a long liquidation, and then overnight we get a P-shaped profile, this profile, which is a short covering. So we got a long liquidation and a short covering. So we found buyers down in the 1980s, and they've taken it up, okay, overnight, and now we're right at the high, or challenging the high of yesterday's RTH session. Usually with a long liquidation, it follows a couple down days, which we've had, and then we continue the trend back up. So that's the auction logic to it. Doesn't mean it has to play out that way. We do have headline news which can revalue the market, which it has revalued the market. We're down off of our month highs, quite considerably, and we put in a new year low down at 1981.50. So a little bit of weakness coming in. Am I right in saying that is a new year low? I should just verify that. No, it's not a new year low. I'm sorry. It was definitely a new month low. I don't know why I thought it was a new year low. Anyway, going to the overnight session. So we've got a P-shaped profile. Our overnight low is down at 81.50, which is basically that week low. And again, this includes, I still include the 4:30 Eastern time to 5 o'clock Eastern time in my Globex session. I know some people start their Globex session at 6 o'clock Eastern. I still put that that half hour after the pause in my Globex. So you might have a different overnight low at that 82.50 if you're looking at just the 6 o'clock on. And then currently right now, and we still have a half hour to go, we've got a overnight high up at 2011.75. and we could expand that out. Our overnight VPOC, don't think it's going to shift, is at 05 and a quarter. And right now, our daily ATR is running at 25.51. So off of that, 20.81.50 plus the 25.51, we've already achieved our daily ATR upside target with this strong move in the Globex. So we're in the possibility of a trend day back up if we can hold above this 2007. To the bottom side, off the current high of 2011.75, our downside ATR target shifted up now to 86 and a quarter. So in this lower distribution and near the low or the close from yesterday. And then our overnight VPOC is not likely to shift. We do have an LVN right here at 09 and a quarter. I'm actually going to use the 0875. And then that really, we got another one down here at 04. And then that's all the information we really need. Well, 1999, but that's a centennial number anyway. I'm watching this 1997 and a quarter. And that's about all the information I need off of there. So I've got a target right now at 96 below the LVN from yesterday. That's the midpoint as well, or just below the midpoint, which is at 96 and a quarter. And then below that, you've got the value area high at 94.50. And then I'd be targeting the 92.50, which is the naked VPOC and just above the VWAP from yesterday. And then once we're inside the value, if we don't bounce off of the VPOC, then look for them to come down and challenge the daily downside ATR target by running through value, taking out the naked close at 85. What does that say? 85. Yeah, 85. I don't know why I was looking at the wrong number on my notes. 85. And then just below that, the value area. So I'm really looking at this as a trade level down here at 84.50 for a possible bounce. But anything below that, this is our major target below, down at 81.50 if we don't hold that 97 and a quarter. I'm looking for this weak low to be put out, and then a move down towards my swing target, which is the 75, just below, just above this 74 and a quarter. Our weekly downside ATR target is running at 69.50. Our 20-period ATR on the weekly is 52.9625. So, if we get below that 81, we could come down and see this move down into the weekly downside ATR target. Next big target below is the 66 and a quarter. And then all our levels remain the same down there. I don't think we're going to get down there today, so I'm not going to spend a lot of time talking about it. We're back up in the 2000s right now. We have found buyers. It's, question whether they just stay strong and continue the move, or we start chopping around today. Upside targets. Let's move this, expand this out. We've got resistance at 12 just above the overnight high. You can see that, I'm not using the high from yesterday as a trade level. I'm using this this 09, 0875 level, because if we stay above it, we're going to take out the overnight high. I don't think 2010.75 is going to give us a lot of resistance. And then above the 12, then we get into, we're clearly into this gap zone, and midpoint of the gap. What do we got? Low of 2016.50, high of 1050. So that's 6 points. So 1050 plus the 3 points. So our half gap fill is 1350. So I'll be looking at 1350 as the first target above, and then the top of the gap zone at 1650. Above 1650, then we're inside of this wick right here, and I would be looking for them to come up and take out this naked close at the 21.75 with a interim target of 1875. Next resistant level really comes in at the 26, and then we're back up into targeting that 3150, which is the first significant CHVN, and the open from this day right here, and the start of this long wick that traverses this whole blunt area of the composite with the undetermined fair value at 61, 52, 50, 42, and 31.50, and all those levels will remain the same. So hypotheses. Oops, that over there. My main hypothesis today is we're going to open auction in range but out of value. So my main hypothesis, and we found buyers, so what I'm expecting is an open auction in range, a move down into testing the 2000 level. I'm actually going to put a trade level here at 2000, just because it's a significant level, and coming down and testing the 2000 on the open, not holding, moving down into the 97 and a quarter area, down to the 94.50. So open auction in range, a move down, find initiative buyers down in this level somewhere between 2000 and 94.50, and then continuing the auction up, taking out the overnight high at 2011 and moving up into the gap zone and traversing the gap zone, and targeting this 2016.50 level. That's hypo 1. So hypo 1 is open auction in range, move down, find buyers somewhere between 2000 and 94.50, and then rotate up. Hypo 2 is up towards the 1650, possibly even a late day probe up into the 2175. Hypo 2 is an open auction in range, a move up, a failure somewhere in the gap zone, and then finding responsive sellers, and then rotating back down and coming down and chopping in the lower distribution of yesterday, with a possibility of testing this 81.50 and a late day probe down into the 78. Why don't I have 78.75 as a target? That should be a target down here. 78.50 actually. And possibly down to the 74. So hypo 2 is an open auction in range, take out the overnight high, come up into the gap, somewhere in the gap zone, finding responsive sellers, and then rotating us back down challenging the 2000 level and then a push through and chopping around in value from yesterday as we mature this auction down here. You can see this is kind of a concave uh, uh, value area that we've got from yesterday. So really didn't get filled in enough. That's hypo 2. Hypo 3 is a open auction in range, a move up, chop around in the gap, and then get continuation up into the 2175 with possibility of a push up into that 2130, 150 from yesterday and closing somewhere up here in this upper distribution around the 3150. So hypo 3 is an open auction in range, breakout, okay, move up, chop around, and then get continuation up into the 30s and around the first distribution, possibly even pushing to 42, but I think that's unlikely. And then hypo 4 is an open auction. They come down, we fail to break out, we come down into testing the 94, and then we get complete failure and we break through the 81.50 and push down into our weekly target, down into the 69.50, 67 level. Unlikely, but certainly a possibility. So those are my 4 main hypos. Take a quick look at gold. Gold is continuing to maintain balance up in the 1330, holding right now a key level at 1350, 1315, 1316 area. If we can't hold that level, look for them to come down, test the value area down here at 1306, possibly even come down to 1300 and test that. Anything under 1300, target the 1285.87 level, these two levels, because it's overlapping and likely be the first spot that they go down to shop for buyers on gold if we can't hold 1300. If we can hold the 1350, 1360, look for them to rotate up slowly back up in towards the 26, 28, 31 level up here in balance with key resistance coming in. This is not supposed to be here. Key resistance should be right here at the 34 level. 34.40 is the value area high for the 2 days. Anything above that, we're back into thin air again and probably get another strong move up in towards the 1350, 1360 area. So that's what I'm looking at in gold. That's going to complete our pre-market session. As always, trade well, trade safe, and we will catch you on the flip side.